First one, state with reasons whether the following statements are true or false. Yes, first one, matching concept is based on accrual concept. Okay, matching concept is based on accrual concept. This is true, guys. Second, customers of business should not be considered as users of accounts prepared by business. They are not interested in knowing the performance of the business. Customer of the business also. If you see chapter number 1, customer of the business is also one of the users of financial statement. So this one is false. Under inflationary conditions, FIFO will not show lowest value of cost of goods. So inflationary conditions means what? Prices are going up. If prices are going up first in, first out, what you purchase first, that will always have the lower value or lower cost. So this is also false. Under inflated conditions, FIFO will always show lower cost of goods sold. For redemption of preference shares, proceeds from fresh issue of equity shares and debentures can be utilized. For redemption of preference shares, proceeds from issue of shares, equity or preference can be utilized, not debentures. So this is also false. Bookkeeping and accounting are not synonymous terms. Synonymous terms means are they same? They are different from each other. This is 100% true. Bookkeeping is separate. Accounting is also separate. A ledger is also known as principal book of accounts. Ledger is primary book of accounts is journal and principal book of accounts is ledger. So this is also true. So 12 marks guys into your pocket. Easy, true or false they have asked this time. Let's go further. Next. 1B. Explain 4 main functions of accounting. Chapter number 1. Directly you can pick up from there. You can write that. Okay, from the following transactions, prepare sales return book of K and Company, a ready-made garment dealer. Sales return book they have asked. Now see this. Return received from AAR store, 30 shirts at 300 and 15 trousers at 500 each. Multiply, you get the value. Let's trade discount, take it in your sales return book. Modern tailors return 10 frocks which were sold for cash. These goods were sold for cash, so it went into cash book. When it is returned, it will also go into cash book. This will not be there in your sales return book. Return received from Tulip stores, 12 t-shirts at 100 each. Let's trade discount, so this will also be in your sales return book. These two things will be in your sales return book. Okay, 2 transactions, 4 marks. Okay, easy question. Next, question number 2A. A firm purchased a second-hand machinery on 1st April 2021 for 15 lakhs, subsequent to which 2 lakh was spent on its repairs and installation. So the value of the machine is 17 lakhs. Value of the machine has gone to 17 lakhs. On 1st October 2021, same year, another machine was purchased for 9 lakh and cost of installing the machine in the new plant is 20,000. So 9 lakh 20,000. This is your machine 1 and this is your machine 2. The firm also shifted the machinery purchased on 1st April 2021 to the new plant, incurred a freight of 10,000. Shifting the machinery from one location to another location. It is an expense which will go to P&L. It will not be added to the machine. Machine value will remain same. They adopted a policy of charging depreciation of 12% per annum on diminishing balance method. What method they are following? Diminishing balance method. Clear? Okay. On 1st April 2023. This happened on 1st April 2021. 1st April 2023 it was decided to change the method and the rate of depreciation to straight line basis. They changed when after 2 years. 2 years they followed WDV only. Okay. On this date, the remaining useful life was assessed as 5 years for both the machines purchased with no scrap value. 1st April 2023, no scrap value. They are going to take the machine value as machine value whatever we get and it will be depreciated under straight line method for 5 years. No scrap value. 1st October 2023, 6 months into the year, first machine became outdated and sold for 2,50,000. On the same day, another machine was purchased for 8,50,000. Estimated useful life of machinery is 10 years and residual value is 3 years. Okay, now what we need to know, machine 1, what is the value on 1st April 2023? It was 17 lakhs. First year you have removed depreciation at the rate of 12%. Second year you have removed depreciation at the rate of 12%. So 13 lakh 16,480 is the machine 1 value. Machine 2 was purchased on 1st October 21, 22 and 22, 23 done. Machine 2 was purchased on 1st October 9,20,000 minus depreciation for only half year and minus depreciation for 1 full year. So 7,61,024. This is the machine 2 value. These two are the machines which are there. They have asked you to prepare machinery account only for 31st of March 2024. Don't prepare for entire year. So when you're preparing machinery account, your 2 balance brought down will be this value. 2 balance brought down will be this value. Okay, 27,70504. These two machines when you add, that is the value that you are going to get. Then what happened on this day? Remaining useful life was 5 years. Okay, for both these machines, remaining useful life is 5 years. On 1st October, the first machine became outdated. This machine became outdated. So what happens? What is the depreciation till date of sale? 13,16,480. Okay, divided by 5 years. Will give you how much? 13,16,480 divided by 5 years. The depreciation will be 263,296. But this is for full year into 6 by 12. You'll get 131,648. 131,648 is your depreciation for 6 months. Remove this depreciation for 6 months. You'll get the WDV. It is sold for first machine. It is sold for 2,50,000. There is a loss. Recognize the loss. Loss to be debited to P&L. Clear? On the same day, another machine is purchased 8,50,000. 8,50,000 10 years. So 8,50,000 divided by 10. 85,000 is the depreciation. 85,000. But what happened over here? You can't take 85,000 into 6 by 12. So 42,500. This will be the depreciation for the second machinery. The machinery 2 is used for the full year. So what will happen? Machinery 2 will be depreciated for full year. 761,024 divided by 5. 761,024 divided by 5. You will get 152,205. This is the depreciation for machinery 3. So what you are going to do? Depreciation for new machine is this. Depreciation for the old machine till the date of sale is this. Depreciation for the machinery old machine which is not sold is this. That you are going to calculate. Okay. Okay, 8,50,000. There is also scrap value, no? Yes, it is going to be 8,50,000 minus. There is scrap value here minus 30,000. So you are getting depreciation of 8,20,000, 82,000. So depreciation will be 82,000. So when you are calculating the depreciation, it is going to be 41,000 depreciation. Okay, 3 assets are there: depreciation, depreciation, and depreciation. And loss which is there, it has to be debited to P&L. Everything is shifted to straight line method. Okay, next we are going to B. From the following information, prepare a bank reconciliation statement as on 30th June 2024 for Messrs XYZ Limited. Okay, tell me one thing. Are they asking you adjusted cash book? No, only BRS. BRS 10 points are there. What is your starting point? Balance bank column of cash book was overdrawn to the extent of 24,768. Bank OD. Start point is OD as per cash book.
तुम्हारे लाइफ के ऐसे ऐसे राज खुल जाएंगे जो तुम्हें खुद भी नहीं पता होंगे.